When it comes to your retirement, do you want to have the same old plan everyone else has? Of course not. You're unique and have your own goals and dreams. Don't be treated just like a number. This is your retirement. So it's time to think differently. And you're in luck because you've found the Retire Your Way podcast with ILG Financial. At ILG Financial, you won't find generic, run-of-the-mill plans containing the same old cookie-cutter solutions. Dave, Chase, and the ILG Financial team focus on building one retirement at a time using their Think Differently philosophy. And that means your own comprehensive plan with customized solutions built to achieve just one goal, yours. So put on your Think Differently hats and get ready to take back control of your retirement today and for all the tomorrows to come. ILG Financial's Retire Your Way podcast was created just for you, and it's starting right now.
When it comes to retirement, do you want to have the same old plan everyone else has? Of course not. You're unique, and you have your own goals and dreams. Don't be treated just like a number. This is your retirement, so it's a time to think differently. And you're in luck because you found the Retire Your Way podcast. Founder and managing member of ILG Financial, Dave Lopez, is here. And my name is Ron Stutz, and I'm going to ask Dave a lot of questions about blockchain and whatever all that stuff is. A lot of people may have a lot of questions about all of that today. And Dave, first of all, it's great to be back with you.
It sure is. I always like sharing ideas with you, and you keep me in check. So, let's keep this moving. If I get too much in the weeds, do me that favor, would you?
Well, let's hope we can keep that tradition going.
Yeah.
One topic that has been popular for quite some time is the concept and the success or skepticism of cryptocurrencies like Bitcoin, things like that. There are a lot of circulating opinions on this particular topic and the future of it. And today, Dave Lopez is here to explain what his insight is on the future of cryptocurrency and how it is possible that something like Bitcoin may not last that much longer. Dave, what's your take on this?
Yeah, thank you for that opening. So, a key to remember is the perspective we have here at ILG Financial has always been with any investment strategy or any investment is when you're planning for retirement, you cannot avoid risk entirely, but what we want to do is we want to only take risk that we deem reasonable and necessary to accomplish your goals. So this idea, you should always be filtering your financial decisions, Ron, through this idea of, if I don't need to take that risk to achieve my goals, why am I taking it? Mm-hmm. Okay, and that is specifically why we really have never introduced our clients to cryptocurrency, any of them, but specifically ones like Bitcoins. However, with it being such a popular topic, it does come up quite a bit, and that's what prompted our team to say, you know what, we need to do a podcast so that we can give folks a little more insight into exactly what the risks are, because today what we'll really talk about is, in general, what is cryptocurrency and Bitcoin and blockchain, and what are the risks to participating in that investment, and that if you understand the risks, it's much easier to decide if it's a good fit for you.
Yeah, and I hear people talk about it all the time, and I try to avoid those conversations pretty much. But, a lot of people talk about it and throw out phrases and all that kind of thing, and they don't really know how this whole thing works. So, I'm hoping that you can explain some of that.
Yeah, and that's what we'll do today. So let's kind of dive right in. So the first thing when we're doing with any investment, let's identify some of the risks. So the best thing when I talk about Bitcoin and people say, well, is it going up? Is it going to make money? A lot of people misunderstand investment specialists when they say, for example, you said this stock was not for you, but it went up. You were wrong, right? Or in this case, you weren't a big fan of Bitcoin, and had I not listened to you, I'd have made $100,000, right? You've heard that mantra.
Absolutely.
Understand when a financial advisor, someone like us, says, hey, I'm not a big fan of Bitcoin, it's too risky, or any investment, that doesn't mean it's not going to hit. It just means it's risky, and we don't think that risk is a good fit for that particular individual. Right. If you came to me and said, Dave, I want to play roulette, and we all know the numbers on roulette are, it's just as good as you get in gambling. What is it, about 49% chance of winning?
Yeah, I don't want to take those odds.
Right. But so I would say, look, Ron, I don't think that's for you because you need that money to make the mortgage payment, right? But if you won often people would look back and say, oh, look, Dave was wrong. I doubled my money.
Yeah.
Okay, we're not saying that Bitcoin won't go up or down. We're just saying let's identify the risks so that if you can quantify them, Ron, now you can decide if it's a risk you're willing to take. So let's talk a little bit about cryptocurrency. Mm-hmm. And I can't think of a better example of what's going on now than you may have heard of this or you may have not. But have you ever heard of the Great Tulip Bubble?
Yes, as a matter of fact, I have. What was that all about? Refresh my memory.
Yeah, so the Great Tulip Bubble is really considered the first financial bubble in history. And it was roughly 1634, right? And it happened with the Dutch.
Yeah.
And what happened was they started to realize, hey, there's certain tulips that it's hard to get that type of tulip, so the price went up of the bulbs or the seed, depending on what you call it.
So we're talking about actual tulip bulbs here, right?
Oh, yeah. That's all you're talking about, right? And they're worth, look what they're worth today. You can go to Home Depot and get one for about $5, right?
Yeah.
But people started speculating on them, and the price went through the roof. And at the height of the bubble, there were some tulip bulbs that were selling for as much as 10,000 guilders is the currency they use there. But just to give you a frame of reference, 10,000 guilders at the time was equal to the value of a mansion on the Amsterdam Grand Canal.
That's crazy.
Right? So think the nicest mansion over in Duck in North Carolina or right on the coast for one tulip bubble.
That's absolutely insane.
Right.
Wow.
This bubble ran from 1634 to 1637. And as it progressed, like all financial bubbles, not just the rich, but everybody started getting involved. So people were mortgaging their entire life savings and their real estate and their retirement savings, everything, to buy these bubbles, thinking this was their one chance to become super wealthy.
That makes absolutely no sense. And I'm wondering, aside from the topic of tulips and tulip bulbs, do you have any other examples you can give us, like maybe the housing bubble?
Yeah, the housing bubble is another example where, roughly from 2002, 2003 to 08, remember the prices just went up really at a greater clip than they'd ever gone up before. And the reason for that is that after the dot-com bubble burst, the government wanted to kickstart the economy. Do you remember that?
Yeah.
Well, the way they did it is they decided, hey, we're going to pass legislation and open up loans for everybody, even people who can't afford them. Well, you can imagine with all of a sudden, if double or triple the number of Americans could now qualify for a loan, even if you didn't have a job, people were able to get a loan.
Yeah.
Well, you get triple the buyers, the price goes through the roof, right? But remember, anytime you artificially create a bubble, you can expect it to implode. It's just a question of when. And sure enough, by 08, these people already were either starting to default on their loans that they had had less than a year or two, or it was clear they were not going to be able to make these loans. And the reason is because they didn't have the financial means in the first place, which is why there always were restrictions on who banks would loan to, right?
Exactly.
And that created an artificial bubble, and we know the result. And, real estate dropped as much as 40%, which has really never happened before, but it had also never gone up that much.
Yeah. Hey, I got a question here about real estate. I mean, with real estate prices so high these days, I don't know if it's, I don't think it's artificially connected or artificially created, but aren't we in a little bit of a housing bubble right now? And what's the future of that?
Yeah, that's a good question. This rise in real estate prices is different than 08 because 08, as we talked about, was artificially stimulated with basically anybody could get a loan. That's not going on now. Now part of it is because of the supply chain and part of it's because of COVID and everybody was cooped up. But now there's just a shorting of housing, right? And that's not necessarily an unhealthy thing. We do not expect any kind of a major crash like we saw in 08 because for that to happen, we'd have to just have a huge uptick in the number of available homes, and they're just not out there. People aren't selling. And they can't build really fast enough. So what you might see, and you've seen this historically in the housing market, is it'll slow down, and you may get 3 or 4 years where houses don't appreciate at all. They don't drop in value, but I remember when we bought our first house I think Cheryl and I bought our first house in 91 or 92, and we sold it in 98 or 99, and it was after we paid expenses, we barely made a penny.
Yeah.
So you had about 7 years of no appreciation. And that happens often in different financial sectors, but happens a lot in real estate, where you'll go in 2 or 3 years, like we're seeing now, huge appreciation. And then you might go 5 or 6 years with none. Yeah. Kind of think of a stair step. So that's hey, but that's another podcast. Let's do that one another day. How's that sound?
That's a good idea. Hey, I apologize for getting us a little off topic there. I talked about the recent real estate prices and everything, but getting back to the Tulip bubble and the housing bubble in the early 2000s, I wasn't even aware how similar those examples are to what we're seeing today with Bitcoin and other cryptocurrencies. So what are we looking at, especially with Bitcoin, to suggest that it may be falling off in the near future?
Yeah, and again, it may or may not be, right? But let's talk about exactly what cryptocurrency and specifically Bitcoin are, and then that way folks can make their own, kind of assumption. We hear a lot of buzzwords around this topic. Bitcoin's one, crypto's one, cryptocurrency, blockchain. So let's kind of jump into it. I want to start with cryptocurrency. So cryptocurrency is really a coin, or a crypto coin is nothing more than a math algorithm.
Okay.
That's it. Okay. But the way they've structured these is the type of algorithm that they acknowledge, in this case, let's say Bitcoin as a Bitcoin, is a certain type of algorithm, and mathematically there's only so many of them out there. So people actually have computers running computer programs searching for the algorithms, kind of like the old Find Waldo. Remember Find Waldo thing?
Yes.
That's all they're doing, right? But they know there's only a certain amount. So imagine that they did crypto and there were only 10 algorithms out there, and you had to find them by just randomly running your computer to look for them, like Finding Waldo.
Okay.
Well, because there's only 10, that creates value, right? That's the reason diamonds are expensive, is because there's a perceived that there's only so many of them. Okay. But unlike a diamond or unlike gold, crypto is literally nothing. It has the other way to hear that phrase is there's no intrinsic value, right? It only exists because you think it has value.
Okay.
It's called, the other name for that is the greater fool theory.
Yeah.
So a better way I would suggest, if you want to think of Bitcoin or crypto, is think of old baseball cards.
Okay. I used to have some of those.
Yeah, so the old Mickey Mantle, man, I'm dating myself. The old Mickey Mantle can sell for a lot more money than somebody who wasn't as famous. But the only reason it has any value is because they stopped printing them. Right? It's still a 5-cent card, isn't it?
Yeah. Yeah.
And someone could, in theory, just print another card.
Yeah.
Right? So it's theory. They don't print them to create scarcity. Okay. But in the end, that card is only worth what someone else will pay, the greater fool theory.
Yeah.
And when things get tough and you need food, that card will end up being worthless, right? Because if no one's there to buy that card. Now, I want to contrast that with something like gold or silver, right? They have been a storehouse for 5,000 years of wealth.
Yeah.
And they may be less now because the world's changed a little, but the idea is it still has intrinsic value. You can still use gold for something, whether it's jewelry or whether it's a catalytic converter, right? Same with silver. It has uses, so it never goes to zero. That's the same argument for real estate, right?
Okay.
It still has value. You can live in it and someone could farm on it. To contrast that, a baseball card or a Bitcoin has none. It doesn't exist. Right? I mean, you could literally today say, I'm going to start Ron Bucks. And you could charge what anyone's willing to pay. If someone's going to give you $5 for a Ron's Buck, well, today it's worth $5. Tomorrow they might give you $5 million for a Ron Buck.
That's just crazy.
It's crazy. Let me give you an idea, in our opinion, right, how crazy it is.
All right.
I'll give you some actual numbers. Right now, there are over 16,000 different cryptocurrencies.
Wow.
So think of Ron Bucks. If anybody can just create them, right? Yeah. You think Bitcoin's doing good, but you think you've missed the wave, right? It's too late for Bitcoin. Why not just start a new one?
I'd love to create some Ron Bucks.
Now, out of those 16,000, there's already several of them that are considered dead cryptos, which is nobody wants them, just like some baseball cards, right?
Wow.
So if you get rid of those, you're still down to about 9,600 active cryptocurrencies, different coins, type of coins you could buy. And I want to put that in perspective. Right now in the United States stock market, it peaked in 1998 with over 7,500 stocks. Today in the U.S., the total market index of what we call the Wilshire 5000, 3,800 stocks. 3,800 companies that you can buy stocks on in the U.S., and there's over 9,600 cryptocurrencies. See the idea of the bigger fool?
Yeah, this is just, I would not want to bank my future on any of this.
Yeah, so one of our concerns about something like Bitcoin is, that one gets all the press because it was the first one, and it's the most expensive one, right?
Right.
In November of 2021, it peaked at about $69,000 for one coin or one algorithm.
Okay.
Right? Again, think of that. You're paying $69,000 for a tulip bud. Okay?
Pretty much,
but
yeah.
In January of this year, it had dropped to $35,000, a 49% drop in 70 days. Now, stocks can do that, but that is the definition, Ron, of volatility.
Yeah, you're talking about volatility. That's it.
Yeah, and this is another reason why all these folks that say Bitcoin is going to replace the dollar and be the new currency, by design, you can't operate an economy with a currency that is that volatile. In fact, there was a great commercial out a couple months ago. I heard it on the radio. I started laughing out loud. They were saying, this boss was saying, hey, folks, we're changing, all your paychecks will now be in Bitcoin. Congratulations. And then one guy got his paycheck and he looked on the internet and saw the price of Bitcoin. He goes, I'm a millionaire. And then they keep talking. He goes, oh, I'm poor. And then 5 minutes later, he goes, I'm a millionaire. But you can imagine, that's great, isn't it? You can imagine if you had this kind of volatility in the dollar, where one day you have to pay $5 for a hamburger, and the next day you've got to pay $12 for a hamburger.
Yeah.
Right? Or you get your paycheck, and one day your paycheck is enough to pay the rent. The next day, it's not enough to pay the rent.
Yeah.
So whenever you look at any currency, it has to be, you don't want volatility. It has to be stable. So you could use cryptocurrency as a very speculative, by speculative, we mean high risk, high reward, right? Like baseball cards, a very speculative investment. But this idea that kind of model could be used for somebody's everyday living currency just isn't realistic.
I'm having a really hard time understanding all this and how it actually works. If I wanted to get into Bitcoin, I wanted to invest in it, what would I do?
So you have to go to special, think of them like a store, a crypto store.
Okay. And
you buy it through there. And the costs are usually very high right now compared to other investments. And the reason is there's not as many of them, right? And it's a new financial product. So, it's like the Wild West. You're working out your kinks. And there are indeed kinks. In fact, I just read an article today, a scam alert that came across my desk is that people are getting phone calls at dinner saying your crypto account has been hacked. And these people panic and they type in their 2-digit access code, and the thief gets the access code, and in 5 minutes your $100,000 is gone.
Wow.
Right. So there's all kinds of this stuff. And you've heard the stories of the guy who, lost his password to crypto and, lost $500,000. Right. And he was trying to get on get a county to open up the dump so he could find the disk drive that he threw away with his crypto password. So in the beginning of anything like this, there's going to be a lot of snafus, but that creates opportunity, but it also creates a lot of danger and risk. So one of the things when we talk about, that's what crypto is, right? It's an algorithm. They run on the back of a technology, which is this will be the future, Ron. It's called blockchain.
Okay.
So blockchain is, think of it, the technology that allows you to buy and sell bitcoins and trade the value. And the word chain is a great metaphor, right? Because what it does is it keeps a track of every place that Bitcoin goes.
Okay.
So you still have privacy, but there's a chain to track it. So that's what you would need for, anything with a store of value. So think if you were buying and selling your houses, you know how the county keeps records of all transactions with the deeds?
Sure.
Okay, this is just an incredibly efficient way to do that. So you will see as all financial currency in the future is going to be built on this blockchain technology. And what it'll do, and it's a wonderful thing, it'll cut out so many middlemen in the banking industry.
Right.
If you're trying to wire money to your friend or, all that goes into all that, it's going to be very streamlined and already is becoming streamlined because of blockchain.
So blockchain is kind of the foundation or the underlying technology behind most of these cryptocurrencies, right?
That's exactly right. And that is very powerful. And that underlying technology is going to continue, whether it continues just for cryptocurrencies or what you're going to see is, it's already happening, is governments are going to start to switch their currency to think of it like an EDollar or a cryptocurrency, but it'll be backed by the government, right? That's where we're kind of going. A lot of folks say, well, if this has so many issues, right, and openly these people talk about, we want this to replace the dollar because we don't want the government in our pockets and we want the free flow of currency not to be tied to the U.S. or Russia or, pick your country. And we all would love that, right?
Yeah. Yeah.
But it raises the second major risk, which is, when have you ever known a government to willingly give up power, especially when they need it so badly?
I don't think so.
Right. So think about this. One of the reasons many believe that the governments today have let crypto go is they're getting people very comfortable with e-currency. The reason they're doing that is we believe that if you look back in 10 years, all currency will be electronic. You will have the e-dollar. You will have the e-ruble, you will have, the e-yen.
Yeah.
And the reason is once that goes into effect, the government will even have more control over tracking your dollar. If you don't have a paper dollar, Ron, if you have an electronic dollar, in theory, you may not even have to file a tax return because the government will know every penny that you had touched and where every penny went. And most people don't like that, but that's where we're going.
That is downright scary.
Now, it is, but it's going to be the future, I think. But here's what we're talking about. Other countries maybe long term aren't going to let crypto go.
Okay.
Right now, here's a list of countries that have problems with crypto. Algeria currently prohibits the use of it entirely. Bolivia has a complete ban on the usage of Bitcoin going back to 2014. On September 24th of this year, China went further than it has in the past with just threats and has outright banned cryptocurrency transactions in China.
Okay.
Colombia outlaws it. Egypt has classified Bitcoin transactions as haram, which is something prohibited under Islamic law. And in September of 2020, they went further and tightened restrictions preventing trading or promoting crypto within central banks.
Wow.
Indonesia has regulations banning its use. Iran likes actually mining Bitcoin because they think they're making money. That's all these computers, running it. Running algorithms to look for Bitcoins. But while they'll let you mine it, right, they discourage the use of it, right? So they think it's a great way. Remember, any country that's having trouble financially is looking for any way to make money.
Yeah.
But they don't want you using it, right? India, right, on November 23rd of this year, India government announced its intentions to introduce a bill to the Indian parliament, which would establish a new central bank digital currency. Did you hear that?
Yep.
Their own digital currency, as well as banning almost all cryptocurrencies. So that gives you an idea of where the rest of the world's going. They're going to put up with this. You're going to get comfortable, and you're like, hey, we're glad you like it. Now you're going to use our crypto dollar, and you're not going to use Bitcoin.
Mm-hmm. Yeah.
Okay. Iraq has restrictions on cryptocurrency. Kosovo does. Nepal does. North Macedonia already does. Russia has just passed its first laws to regulate cryptos. That was back in 2020 for the first time. In January of this year, the Russian civilian servants are banned from using crypto. Right? And in July, Prosecutor General announced new proposed legislation which would allow police to confiscate crypto deemed to be illegal or obtained, citing its use in bribery. So Turkey outlaws it, Vietnam outlaws it. So you see the trend happening, right?
Yeah.
So our big concerns are that down the road, governments, it's just going to be the stroke of a pen. We call that legislative risk. The stroke of a pen where they say, no more, you can't, I don't care if you own it or not, but you can't cash it in for money. So then it becomes kind of worthless, right?
Exactly, yeah.
So those are some big concerns. Now, when will it happen? How will it happen? Nobody knows. But what you want to do is see the inherent risks with this, for lack of speculative investment opportunity. It doesn't mean you're not willing to take the risk, but only you want to use money that you're prepared that could literally go to zero.
Yeah, highly speculative. That's
highly
for sure.
speculative. And you can win in highly speculative, just like you can win in Vegas.
Yeah.
But there's a lot of challenges. And like, for example, the biggest concern we've got with something like Bitcoin is if you're in the know, right, and let's say it is still thriving, why in the world wouldn't you say, well, let me just go pick one of these that's on the beginning of its growth curve instead of one that's already up to $69,000. So this idea is, boy, you could see money flooding out of Bitcoin as fast as it flooded in, as it's moving, from Bitcoin to Dogecoin, or from, you name the different coin, as they're looking to be the next, Ponzi scheme, or the next one who gets in on the ground floor.
Ron Coin or Dave Coin.
We'll introduce that in the next podcast.
You're listening to the Retire Your Way podcast with ILG Financial. Ron Stutz here along with Dave Lopez. And Dave, all of this is really kind of confusing to a lot of folks. And, we just heard so much in conversation about Bitcoin and cryptocurrencies in general. Is this, all of this that you just explained, is this specific to just Bitcoin, or is this something that we're going to see across the map in the cryptocurrency world? I mean, how real is all of this stuff? And it's never going to end, I take it.
No, I think it's true for the whole cryptocurrency world. I think we believe that down the road, and we don't know the time, all the governments will pretty much jump in with their own e-currency. Right? And then at that point, these cryptos will kind of go the way of the dodo, because they'll outlaw them, right? Or won't allow you to trade them in. So it'll be no different than you trading with baseball cards or chickens. It's something you could still do, but it wouldn't be feasible because the government's not going to cooperate with you.
So we're seeing a whole system transform here, and the potential is for it to be more government control.
Yeah, it will be technically. We will move to e-currencies, right? Not much different than we are today. And, it's not that far off from where we are now. Most people today, me included, rarely use paper dollars, right? Whether I'm using my credit card or my debit card, in theory, you're already using e-currency. If you're making transactions, right, and you're not touching a dollar bill. Yeah. All of it's recorded. The government could get their hands on any of the data between the credit card companies or your bank if they needed to. And there's a chain of where every penny of your money went. Bitcoin, or not Bitcoin, but let's say it another way, blockchain is just a much more efficient way under the seams for all of those transactions, credit card, debit card, transfer of funds to your friend or your neighbor, transfer of money to buy a house. Blockchain is a more efficient model that all banks and governments will, if they haven't already, will start implementing as a way to monitor the transaction, the movement of money, the movement of ones and zeros on a computer screen to show that I've just given you $10 and you've just received $10. But I don't think individual cryptos will be able to survive because they're going to have to go against the 10,000 what do they say, the 10,000-pound, 800-pound gorilla in the room, which is the governments. And the governments do not want to give up control.
Yeah. I don't like being monitored with every penny I spend, but I suppose that horse is out of the barn already. Yeah. And that is going to continue happening. But it's kind of I guess one way to describe all this kind of thing is it's a revolution, isn't it?
It is. It's a technology revolution, and we will look back and, if free Bitcoins, not connected to a government are gone, you'll still look back and say, wow, that's when the world changed back then. And we went, because of Bitcoin, it was so easy now to move money. We didn't need all these middlemen. Let me give you a great example real quick.
Okay.
If you want to wire money to your sister across the country, it's still a bit of a hassle, right? You got to kind of go to your bank. Sometimes you can do it right on your website with the bank, but then other times, if they want certified funds or something, you've kind of got to go to your bank and do an electronic wire transfer. With blockchain in place down the road, all those middlemen, because everybody who's involved in that process is getting a little piece of the action, right? Down the road, they're going to streamline that. Blockchain will streamline that. And imagine just as easy as you take your phone and you touch it when you buy a cup of coffee at Starbucks, and it automatically deducts from your PayPal account.
Yeah.
That's how easy you'll be able to literally buy a house or transfer, $50,000 to a stock or something like that because of blockchain. Blockchain's revolutionary, but Bitcoin and these coins are highly speculative, like baseball trading cards or art are speculative. Now, that doesn't mean you shouldn't participate in them, but there's an age-old saying that I completely agree with, and this is a great way to kind of close this podcast. I strongly discourage investing in anything that you don't understand how it works. Mm-hmm. Warren Buffett says that. You get one after another. Financial expert says that. They say, I'm not doing it. Doesn't mean you couldn't make money, but I still don't get it. So anybody, and you and I, Ron, had this conversation earlier, who says, maybe it's me, I just don't get it. That's what a lot of financial experts are saying, and it's a nice way of saying it really isn't anything, right? They're saying, I still don't understand the value of an algorithm. Mm-hmm. Well, the value is only the greater fool theory, which is you're going to pay more than I paid for it. But the minute somebody, just like the great Tulip bubble, the minute someone says that computer algorithm isn't worth that much, right, then you'll start to say, well, I paid a lot. How much will you take for it? And that's, by the way, how the Tulip bubble ended. When it ended by roughly, 1647, was I told you, 3 years later, the price of tulips were about what they were before. And here we are, 500-600 years later, and they're worth next to nothing.
Well, I want you to know that I'm not going to be investing in tulips, and I'm going to leave Bitcoin and all that cryptocurrency stuff alone for now as well. But I do appreciate your taking the time to explain all this kind of thing. I understand it a little better than I did when we started, but there are still lots of questions out there, and I'm sure that I'm not the only one who has them.
Yeah, and if you do, that's what we're here for. So we tell our clients all the time, if anything financial related comes up and you've got a question, our hope is you're comfortable enough with us to say, hey, let's run this by the ILG team and see, and just get their 2 bits. The reason that study after study shows that folks who have an active relationship with a financial advisor, overall, they do better financially. It's just because it's another set of eyes. It's the same reason athletes who have their own coach and trainer do better than ones that are just winging it on their own. Yeah. You can know a lot about finances, but it never hurts to have somebody else have another perspective. And that's what we are here at ILG Financial, another set of eyes just to give you another perspective on what you're looking at. We encourage our clients to take advantage of that.
Well, folks, Dave Lopez understands all this thing pretty well, a whole lot better than I do, that's for sure. And if you're comfortable about asking questions, Dave's a good person to approach. The number to call if you'd like to have a conversation is 540-720-5656. That is 540-720-5656. Income, legacy, growth, that's all right here at ILG Financial. And it's all about helping you plan for retirement your way so you can achieve your financial goals. Call ILG Financial today or go online to ilgfinancial.com to learn more. This has been the Retire Your Way podcast with ILG Financial. Dave, it's been fun talking to you today. Thank you so much.
It has. You have a great afternoon, and I look forward to our next chat. Maybe it'll be the housing bubble.
Who knows?
Who knows?
Thanks for listening, everybody.
Take care.
The information provided is for educational purposes only and is not intended as investment advice for any individual or entity. All information contained herein is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. The views presented today are those of Dave Lopez and do not necessarily represent the views of the Alpha Star Capital Management, LLC. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Investment advisory services offered through Alpha Star Capital Management, LLC, a registered investment advisor. Alpha Star and ILG Financial, LLC are independent entities. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability.